Good evening, friends. I welcome to you in this our first series of webinar organized by our firm HX Consulting. We are going to talk regarding the audit committee, which is one of the important committees of the board of directors. Audit committee meetings and the role of members, directors, and secretary. This this is the high time during the month of May to September. The companies are busy. The companies are busy in organizing the board meetings and approval of the financial accounts of their respective companies, whether it is a listed company or a public limited companies. The role of audit committee is a very important role, and this is the first committee which is going to make a lot of difference in the performance evaluation of the company. You may wonder if that why we are discussing audit committee meetings and the role of members, the directors and secretary. It is quite obvious that both are important, and my only uh, my only submission is that it is the audit committee which is going to have an impact on the performance evaluation of the company. Audit committee should be considered as a censor to the board. The scope of a job of any audit committee revolve around the early warning system of any crisis, measures the performance of the management and company as a whole, monitoring efficacy of the risk measurement tools, review of the audit reports, statutory audit, secretarial audit, cost audit, internal audit, and tax audit reports against the control parameters of its own. You may wonder that why the audit committee is going to consider for the cost audit, internal audit, and tax audit. It's my personal view that the audit committee should not only focus on the financial audit, but it should also focus on the secretarial audit, cost audit, internal audit, and tax audit reports if it is available at the time of considering the financial audit and considering in between any kind of the audit which has taken place. Another point is deviation in the above are discussed and probed with the auditors and KMP team to prepare the audit committee's recommendations to the full board. Now we can shift to that constitution and role of audit committee under the Companies Act 2013 and the company's meeting of board and its powers rules 2014. How the audit committees are constituted and what are the provisions under the Companies Act and the rules made thereunder. This we will consider it. The idea here, it is the audit committee, the whole webinar is structured in such a way where at the end of the session, We will focus primarily on increasing the efficiency and quality of the deliberation by the audit committee and improving their effectiveness. It is section 177 of the Companies Act 2013, which states every listed company, every other public limited company having a paid up capital of 10 crore rupees or more, or which have in aggregate outstanding loans or borrowings or debentures or deposits exceeding 50 crore rupees, or companies having turnover of rupees 100 crores and more. All such companies shall constitute an audit committee of the board. Membership and chairmanship. Once the committee, once the audit committee is constituted, is required to be constituted based on these parameters. It is the membership and chairmanship is to be determined out of the full board members. The committee shall consist of minimum 3 directors, with the independent directors, including chairman, shall form the majority. Majority of the committee members, including the chairperson, shall be able to read and understand financial statements. It's a very ridiculous, sometimes in international parameters, that the committee members, it is written as such in the law itself. In India, please, majority of committee members, including the chairperson, shall be able to read and understand financial statements. Just friends, it is in our experience of the last many decades that how the audit committees or even the board of directors, out of which committees are constituted, that these are the people who are the family members or who are just friends once time, and it is a old boys club, and from that stream the directors are appointed, but practically they do not have any understanding what the responsibilities of a directors are there. And once they are on the board, what practically they are contributing, everybody knows about it. That is why it was the compulsion as such that in the company's bill itself, this particular language was written, that they should be able to understand financial statements, or say they should be financially literate. So keeping in mind, of course, it is not the job of a company secretary. It is otherwise the NRC, this nomination and remuneration committee of the board, which is recommending to the quality of people, the good people who understand the corporate working, the responsibilities of a director, they are of integrity and knowledgeable, such persons. But being a company secretary here, we have to also to be aware. You see, when a board meeting or audit committee meetings are held, it is the responsibility from both the sides. A secretary is playing like a referee, and it is the board which is actually taking the decision making. But if any of them or the board is going out of the boundary, it is the duty of the company secretary to bring an attention or raise the flag. That is the reason that the secretary's role is very important, either in the board, full board, or in the audit committee. Now the next point is the committees existing before the commencement of this act shall be reconstituted within 1 year of such commencement. Of course, that time is over. It was 31st March 15, and most of the companies, I say that they have already reconstituted their committees, or fresh committee, audit committee they might have constituted. But maybe some remaining companies are there who have not done, they should immediately do it. The next slide we will study the role of committee as per the new act. Under section 177(4) of the Companies Act 2013, the committee may do the following acts. Here means it is the mandate. It is the full board while constituting. It is called the charter of the audit committee. This charter has to be followed strictly by the audit committee members. And what are those? That the law itself is giving that it is the first time in the Companies Act 2013 that the charter of the audit committee itself has been mentioned under section 177(4). This is that audit committee recommend for appointment, remuneration and terms of appointment of auditors of the company. The audit committee may call for the comments of the auditors about internal control systems, the scope of the audit, etc., scrutiny of intercorporate loans and investments, valuation of undertakings and assets of the company, evaluation of the internal financial controls and risk management systems, monitoring the use of funds raised through public offers. We say one by one we take a recommend for appointment, remuneration, terms, appointment of auditors of the company. It's very important. Who is that audit firm? What is their background? Where they have done the job? What is the integrity of those chartered accountant firm? The partners, their reputation. Does it match with the profile of the company? That has to be seen. Based on that, and whether the fee is commensurate to their profile with their delivery, that is thing. The next is the big audit committee may call for comments of the auditors about internal audit, internal control system, the scope of the audit, etc. Here, the audit committee will fix up the terms, the mandate, the scope, what they can do. Of course, it is already there within the law, but despite that, that is the threshold. The board of directors, including the audit committee members, cannot curtail that. But if it goes beyond that, if someone goes, give mandate more than that, so that is a good point. It gives a good scope of work to the auditors. Next is scrutiny of intercorporate loans and investment. Yes, this is a very important role of any audit committee. In fact, the core of the thing that it is the intercorporate loan, funds transfers, interest in the associate companies, subsidiary companies, or the companies where the directors or anybody who is interested may be interested if the funds are being channelized in such kind of companies where the company as such may not be able to recover, may not be able to take full benefit of it. That is why that scrutiny has to be done. If there is a transfers, if this transfer is there, then whether it is directly beneficial for the company or not is one of the important mandate. Next is evaluation of undertakings and assets of the company. Valuation of, you say, once a valuation is there, the committee or the board is to consider in totality and evaluation of undertaking, financial controls and risk management system is one of the important element of any audit. Evaluation of internal financial control and risk management system will spell out that how the financial systems are being delegated in the company, what are the authorities, and how it is to be controlled as such, so that there is no frauds or any misappropriation of the funds of the company. Next is monitoring the use of funds raised through the public offers. Whatever the funds have been raised by the company either through the public offer or through the qualified institutional investors or private placement for the funds, the funds have to be monitored that it has been applied for the purpose for it was raised. Then last but not least, I have given the highlighting in the red text. Keep the audit committee always in the risk sensing mode. RSM. It has to be always in the mode to sensing if they have to sniff out if something fishy is going on. That's very important. And that is the primary role of any audit committee. Now, within the audit committee, while doing and performing or discharging their duties, the law itself, under section 177, 9 and 10, it says that there should be a vigil mechanism in the company set up by the audit committee of such company. Who is to follow this vigil mechanism? Every listed company, companies which accept deposit from the public, companies which have borrowed money from banks and public financial institution in excess of 50 crore rupees shall establish a vigil mechanism for directors and employees to report genuine concern. The mechanism shall provide adequate safeguard against the victimization of persons and make provisions for direct access to the chairperson of the audit committee in appropriate or exceptional cases. Under the rules, power to audit committee to reprime frivolous complainants. Yes, here many times vigil mechanism is being misused by some vested interest. They're either in the board level or at the management or the below the board level, the senior management, there is a groupism. The rival groups may distort the thing, may give some impediments and creating certain problems to the actual managing team. So whenever such kind of frivolous complaints are received, then the audit committee has been empowered under the rules to be that such kind of complainants are to be reprimed or to be warned. Audit committee under sub clause 11 of clause 49 of listing agreement. You see now until now we have gone through the Companies Act provisions. Now the audit committee provisions are also applicable through the listing agreement clause 49 sub clause 11 on the listed companies. If any company which is not a listed but a public company but falls within that particular parameters, within that parameters the company has to apply only the Company Act provisions and to follow that only. But a listed company, in addition to the Companies Act, has also to follow this. So there are various requirements of corporate governance under the clause 49 of the listing agreement, including the constitution of audit committee. Now, clause 49, sub clause 11, we will discuss. It is qualified and independent audit committee members. This is the requirement of that clause. The committee shall have a minimum of 3 directors as members. 2/3 of such members shall be independent directors. Here, just please note, under the Companies Act, it says minimum 3 directors with the majority of them to be independent directors. Here, under clause 49, it says it goes more towards independent directorship holding. It is 2/3 of such members, not 51%. So it is the majority means in the Companies Act, and 2/3 of such members shall be independent directors. Now the question may arise, which to follow? Naturally, it is if it is the 2/3 of such members are independent, it is inclusive of the compliance of the Companies Act. So it has to be there. Next is all the members shall be financially literate and at least one of members shall have an accounting or related financial management expertise. Say here again the same thing that the competent person should be nominated who are actually financially literate, they understand the balance sheet, they can interpret the numbers, the financial figures, and various cross references, that sort of the mindset has to be there of the audit committee member, at least one of them. The chairman of the committee shall be an independent director. Yes, it was also under the Companies Act, and it is also here under the clause 49 that the chairman of this audit committee shall be an independent director. The chairman shall be present at the annual general meeting to answer the shareholders' queries, and he may invite others also. Yes, here as per this, the chairman of the audit committee is supposed to be in the annual general meeting. He must be present so that the shareholders or the stakeholders, of course not the stakeholders, the shareholders who are eligible to attend the annual general meeting, they can raise a question on any of the financial figures, and appropriately that can be replied by the chairman of the audit committee, because it is the audit committee, after scrutinizing, approving, and giving recommendation to the full board, and the full board in turn is giving recommendation to the shareholders for their final approval. Company secretary shall act as the secretary to the committee. It is another condition which has elevated the role of company secretary way back when the clause 49 had come. Since then, it is the company secretary's role is very important. It was felt by SEBI at that time, and he is to play a very proactive role as a supportive role to the board of directors. That's very important. It's now the meetings of the committee. The audit committee shall meet at least 4 times in a year, and not more than 4 months shall lapse between two meetings. You see, these are the threshold. There is no bar if any audit committee, if the need, can go beyond 4 meetings, 4 times, but it is the 4 times in a year. Why 4 times? The clause 49 speaks because it is the quarterly financial results are to be published. So, and any financial results which are to be published or by the company, it is the audit committee will first review it, give their recommendation and comments to the full board. That is why 4 is the threshold. But it can be more than that. It could be monthly, it could be bi-monthly. It all depends on the need of the company. The quorum shall be either 2 members or 2/3 of the members of the audit committee, whichever is greater. But there should be a minimum of 2 independent members present. Here, the emphasis is always in the audit committee that independent directors play an important role. They are unbiased. They are not representing either to the promoter or to any other vested major stakeholder in the company. Since they are independent, it is supposed to be that their critical analysis of the financials would also be independent. So the meeting of the committees have to be within these parameters. You see, under the Companies Act, the minimum audit committee meetings of the audit committee are not prescribed as such. But at the but when it is the board meetings are there, and 4 board meetings are there, the similar provisions are there for the board meetings also in the Companies Act. But for the audit committee, there is no such prescribed as such. Powers of the audit committee. Powers are derived from the same charter or the mandate which has been prescribed for the audit committee to carry out their audit. Right? It is, for example, it is already under section 177(4). There are numerous activities that we mentioned in the previous slide. We have already seen it. Out of that, the important 4 are to investigate any policy within its reference. Whatever the reference is there, for that any policy, mechanism, procedures which is prescribed, it can investigate up to the maximum possible. Next power is to seek information from employees KMP. Yes, audit committee members are not full-time directors. They are not the full-time employees of the company. But at the same time, they do have the right to seek information from employees or key managerial person. Key manager person, all we know it, CEO, CFO, company secretary, full-time directors, all that. The next important power, the to seek attendance of outsiders with relevant expertise. Yes, audit committee under the law is also, if they think that it is in the interest of probing any particular issue before the audit committee for consideration and for the recommendation to the board, they can invite experts from the market, from outside the company, and they can be present in the audit committee meetings, and they can naturally uh, give their deliberation, and audit committee can consider it. Next is to obtain any outside professional advice. It is equivalent to the outside with external expertise, and it is one and the same professional. It's a slight difference on expertise and all that. Clause 49, role of the audit committee and its members. Now, what we are seeing that, and in the previous slides, we have seen the audit committee functions, activities, and mandate. Now, here it is the role of the member itself as an in their individual capacity. Earlier, we had seen as a collective. Here it is the individual. Oversight of the company's financial reporting process and to ensure that financial statement is true and fair, current, sufficient, and credible. These are the individual and collective say as per the clause 49, and earlier the slides were as per the Companies Act. It is recommending the appointment and removal of external auditors, fixation of audit fees, etc. So means these are the points which the role of audit committee members, which is to some extent repeated between the company law, Companies Act, and the clause 49 as prescribed by SEBI. Reviewing the management, external and internal auditors, and internal control system. This is, of course, reviewing the management means it is a KMP. Here the management will always be the KMP or one line below the KMP maximum, not beyond to that, because they are not interacting with the middle management or the lower or the micro level. It is the macro level at the senior level. So they have to review the performance of the KMP, external and internal auditors, and internal control systems. Reviewing the adequacy of internal audit function. It's very important. Here that we are reviewing the adequacy, whether the internal audit functions are adequate to meet the challenges of the company, to meet any immediate requirements of the company, or there is some kind of financial fraud or any kind of mistakes had taken place or blunders have been committed, or by ignorance somebody has taken advantage of the from the company. So these things are to be reviewed, and the internal audit function, the internal audit department, how efficiently they are doing it. Discussions with internal auditors, any significant findings. This is another role that clause 49 is prescribed. Internal auditors are bringing to the notice of the audit committee or the chairman of the audit committee any significant findings, any important revelations, or the important their search. So that has to be discussed. Many times, whenever the frauds happens, it is the slackness or it is the attitude of the audit committee is not as alert, or it may be some collusion with the even the audit committee members with the other parties. What has happened in the Satyam is one of the example where had the audit committee been alert and they would have been more active, proactive, the entire scenario could not have happened. The last is reviewing the company's financial and risk management policies. It is the financial and risk management policies, the risk portfolio these days have developed to a great extent, and the risk management analysis is a very important aspect which the audit committee has to attend it. Review of information by audit committee. Now, earlier in the earlier slide, what was to be done? Here it is that what kind of information the audit committee generally attend. Financial statements and draft audit report, including quarterly and half yearly financial information. This is that particular information pack which is reviewed, which is supplied to them, and which is scrutinized. Next is management discussion and analysis of financial conditions and results of operations. This is again under the clause 49, the responsibility of the audit committee. And here, this particular kind of report, management discussion and analysis of financial condition and results of operations. Next is reports relating to compliance with law, secretarial audit report. Here, the secretarial audit report as such has not been mentioned, but I prefer that the compliance with law, earlier it used to be a separate kind of certification obtained either from a practicing company secretary or from any law firm being engaged, or internally the legal team of the company or the head of the legal is giving a certificate of compliance with the laws. But since the secretarial audit has now been mandated, it is essential. So in that case, it is the secretarial audit report will fulfill this particular report, and it should be extensively used by audit committee in the current financial year onward, means financial year 14-15 onwards. Records of related party transactions. Yes, this is another piece of papers bunch, the records which has to be scrutinized, how the related party transaction has taken place, whether the legal parameters within which it is allowed are being followed or not, that has to be seen. The next is management letters, letters of internal control weaknesses. You see, management representation letters are issued by the audit committees to the auditors, financial auditors, for their comfort, and affirmations are being given. Now, the point is that it should not be carelessly, it has to be given a due importance, and based on that only, it is to be passed on to the auditors. Yes, these are the management representation and letters of internal control and weaknesses which has been uh, found, which has been brought to notice by the internal audit team. Reports related to risk management. You see that, as I said, that the larger companies having in the complicated international environment, they are having their risk management department itself. They may be working in tandem with the finance and management accounting and the legal team. They are developing and making analysis of all kinds of risk, financial risk, political risk, then economic risk, and government policies risk, labor law related and risk, technological upgradation and obsolescence risk. So there are various kinds of risk, and those various reports under the risk management are placed, and that has to be analyzed and deliberated by the audit committee, and to finally to give a direction and recommendation to the full board how it is going to impact against the company. Now it is the very important here, audit committee to enhance, how to enhance performance of audit committee members. As I said in the beginning of this webinar, that it is not because what the law is there, you know it. The regulations also you know it. And but beyond that, how to increase the performance, how to improve the performance of audit committee members. This is very important. Here, the act in the best interest. You see, the audit committee members have to act in the best interest of the company or entity. You see, the members who are having very tall and very good profiles, CVs, qualifications, they are graduated from the top of the institute of the world, but that is one aspect. The integrity of an individual is another important thing. So that best interest, integrity has to be there, and it is not the duty of the audit committee itself, neither it is of the company secretary. But the point is that this is the NRC, that means this is nomination and remuneration committee, who is to finally recommend for the appointment of directors, and out of those directors, the full board is the audit committee is there. So it is to be seen at that level itself, not today, but it has to be reviewed. Yesterday, a person might have a good intention. Today, he might have changed his mind. The greed has no silver lining. Be proactive in identifying issues and risks. It is the member, audit committee members have to be proactive in identifying issues and risks. One has to go beyond their regular mandate. They have to be more proactive. They have to identify in advance. They have to be foresighted. They have to develop various probabilities how the company can be exploited, or how the company or the risk can fall upon the company. Next is encourage openness and transparency. The audit committee must always be encouraging, giving supportive, listening to any kind of good ideas or kind of suggestions received either from the company or from auditors or internal auditing. So that openness and transparency is an important role. Once it is there, then naturally the audit committee will be in a better position to deliberate. And this openness, transparency, not only, I mean, it should be intersee the audit committee members also. So what next is work constructively with the management. Many times, some are the bullies kind of directors. They having tall egos, and sometimes they uh, they behave, they handle with the KMP in such a manner which is not going in a constructive friendship. It's not going in a constructive companionship, not as a good colleague. So that is why they have to work constructively with the management. It is both ways supportive. It has to be guided. If the audit committee is probing, they should probe it, but should not humiliate them. That's the idea. Once it is done, then things will automatically come back from the management into on the table of the audit committee. The truth will come out. Display a professional approach to duties, including an appropriate commitment of time and effort. A professional approach to duties, including an appropriate commitment of time and effort, it's very important. Many times, we, the Indians, don't take it an offense for anybody, we are a bit lenient, but we have to learn from such other parts of the world where the punctuality is very much respected. And in international scenario, if the companies are working in the international market, they have to be very punctual to their schedules. So based on that, the same culture is to be cultivated within the working atmosphere of the audit committee also. And not only within them, those who are dealing with them, they should also respect the time. They should uh, comply. Next is knowledge of application of accounting, auditing, and assurance standards. You see, the audit committee member should be knowledgeable to the extent of what is the accounting standards, what is the auditing standards, and what is the assurance standards. The various these standards, they are not to be expert, but at least they must be able to comprehend, to understand what does it mean, so that they can have a meaningful discussions with the statutory auditors, internal auditors, or any outside experts if they have been invited. Good judgment, objectivity, and honesty. You see, of course, it is very general, but it goes a long way to observe the good judgment, objectivity, and honesty. Now, this is a part that we, the fraternity of the company secretaries, who are supporting to the board as well as to the audit committees, how to play role of a proactive secretary. It's my experience, which I've dealt with a number of companies. The most important is review action taken report, ATR, from previous meeting and finalize for the proposed meeting. You see, one decision has been taken, some suggestion has been given, one of the directors or group of directors have instructed that these actions are to be taken and a feedback is taken. And feedback is to be obtained from the respective employees or respective management and the departmental heads. So what action has been taken from the date of the previous audit committee meeting or board meeting till today's meeting? So this time gap has to be replied in a action taken report. So it is the columnar table, which we all know it. It is the what were the activity, what was the decision taken, what suggestions were, and what was demanded by the directors or the audit committee members. So it has to be updated. So what happened many times, the department head or KMP, wherever something is fishy is going on, is not genuine kind of transactions. So they keep on lingering or under the impression that, okay, since one meeting has gone, so it is the next is coming, and there was a 3 months gap. Nobody has asked in between, so they are relaxed. But that has to be filled in. It is to be given as an input to the audit committee. Next is continuously be connected and to receive inputs well in advance from all the departmental heads who are to report to the audit committee. Sorry. So it is the company secretary's role is playing between. He is just like a feeder. He's obtaining from the left hand all the information and from the right hand giving it to the audit committee or to the board. He is to continuously be in touch with the departmental heads to obtain their functional uh, reports and their activities during the between two board meetings or between two audit committee meetings, what has happened, or during a particular quarter or the financial year as a whole, what they have done it. If it is, say, it could be marketing, it could be purchase, it could be the financials, and it could be the research and development, it could be plant and production, and it could be the advertisements, budget and all that. So all these departmental heads have any, including some important legal cases going on in the company. What are their status, kind of thing. So these all, once it is there, then the audit committee will do it. Now I just want to mention here, while these things which we are discussing, it is more or less the same. The board of directors, the full board, is also considered the same. But before that, it is the audit committee's mandate is very. This audit committee's mandate is very bigger enough. The role of this audit committee is very wide, and because of that reason, this committee is very important committee, and it is summarizing on the first hand, reviewing, scrutinizing, and thereafter it forwarding and submitting their report to the board of directors, and they deliberate finally as a final decision for and on behalf of the company by the apex authority, that's the board of directors. That is why all these things which is to be considered by the audit committee. Issue audit committee meeting notice and agenda with full details and annexure to all the audit committee members. Yes, here to give a good service from a company secretarial department to the audit committee notice, agenda, along with all the annexures or the reports received from the departmental heads relevant, is to be forwarded well in time. It is the 7 days notice has now become mandatory under the Companies Act. But if it is 10 days, nothing like that. Prior and advanced received information helps to the board of directors in deliberating better, giving a meaningful discussions during the meeting, and giving a good and sound decision in the interest of the company. So here, who is responsible? It is the company secretary. If his role is well attended by him, it gives a full support to the audit committee. Next is keep your formal and informal channels open to gather vital information from within and outside the company to supplement the audit committee members. You see, you as a company secretary, the audit committee directors, members, they themselves on their own, everybody has received the information. But despite that, those who are not having some genuine interest or some conflicting interest in their responsibilities or vested interest to cheat or to commit any kind of the nuisance or to misuse the position in their respective companies, they invent very ingenious kind of methods and tools to exploit the situations. So for that purpose, I suggest that the company secretaries, to gain their role, to gain their importance, to gain their status, they have to be very alert and keep their ears open, eyes and ears open, so that whatever you feel it, you can become as a whistleblower. You can become a whistleblower to the audit committee, and you can use that. You can use the as a part of the vigilance. Next is our slide, responsibility of the audit committee to advise the board. How it is a recommendation and reporting to the board. Until now, we have discussed all the constitution of the committee, then it is the powers have been given to them, then how the internal audit and how the other parties can be invited in the audit committee meeting, and uh, how the audit committee is to operate and to conduct their meetings for a meaningful decision. So it is the next is, after all these things, what finally they have make out their opinion. So they will make a recommendation. They will review and give their recommendation to the board on significant points of financial audit, secretarial audit, cost auditing, and tax auditing report. It should consider the significant accounting policies while reviewing the financial statement prepared by the management. And the other important recommendation, the board approval is required for other statements containing financial information, for example, summary, financial statement, significant financial return to regulators, the committee shall review such statements. So these are all the important recommendations which is to be given by the audit committee to the full board. Internal control and risk management system. Internal control and risk management system, it comprises of ensure that appropriate and adequately designed controls are in place. It is a responsibility of the audit committee. Review the company's internal financial controls, the system established to identify, assess, manage and monitor financial risk. Review and approve the statements included in the annual report in relation to internal control and the management of the risk, like management discussion analysis, business sustainability or global reporting initiative types of reports in annual reports. In the full annual report, it is comprised of number of other sub-reports. So these are to be reviewed by the audit committee. So it is the responsibility of as a internal control and risk management system where the audit committee plays an important role scrutinizing and arriving to the most important and critical issues and forwarding it to the full board for the final decision. Non-compliance, you see this under the Companies Act or under the SEBI Act. I'm just touching upon the Companies Act and 178(8) of the Companies Act. In case of any contravention of the provisions section 177, 178, the company shall be punishable with fine which shall not be less than 1 lakh rupees, but which may extend to 5 lakh rupees, and every officer of the company who is in the default shall be punishable with imprisonment for a term which may extend to 1 year, or with fine which shall not be less than 25,000 rupees, but which may extend to 1 lakh rupees or with both. So we can very well consider this deterrent, and the company secretary as well as the audit committee members both have to be very alert to avoid such kind of unpleasant situation in their career and for the company. Now the next slide is techniques and tools for audit committees. This is important for enhancing the effectiveness of the audit committee. The chairman of the first one, the chairman of the audit committee should keep connected regularly with KMP and statutory auditors, secretarial auditors, cost auditors, and internal auditors, not as a whole-time director, but keep open two-way MIS flow. You see, many times the audit committee members, they do not interact. Whatever material has been supplied to them, just based on that only, they are discussing, deliberating, and deciding, which may be deceptive because information has been withheld or it is being not fully given as a full disclosure is not there. Under those situations, it's important that the chairman and audit committee should keep and regularly connect with this key managerial personnel, CEO, CFO, company secretary, and other people, that what's happening, what's going on, that's all. So it gives a connection. Keep the vigil mechanism updated and encouraging. Another important tool which the law itself has given the authorization, the same vigil mechanism has to be updated with the period of time, because when the time is changing, so the mechanism is also changing. So encourage it, use it. So that culture is to be developed in the company itself. Make once a year a visit to plant, showroom, dealers without disclosing identity. Yes, it's a very old technique done by the kings of the olden times. You would go to the showroom of the company, go to the plant without disclosing your identity and find out what you are seeing from your eyes or listening, and what the information is furnished to you. The audit committee will make a difference on its own. So very important too. Keep close ears on the capital market, investment community, media, news about the company in India and abroad. This is another important thing where any director, wherever he is a director, he must be open and start gathering information the day he joins the board or the audit committee members. Now the last slide, we have international practice by audit committee. I here say that one of the important forum in the world is National Association of Corporate Directors, NACD Washington, where all the top companies, maximum directors are also the members, and they give a lot of, and this association is making regular research on their own and the surveys. Based on that, they have developed some self-assessment questionnaire for audit committee of any board to test its own strength and weaknesses, consequently to enhance its own performance. The questionnaire about the effective practice by audit committee are under the following five sections: constitution and organization of the audit committee agenda setting and oversight of financial reporting process, oversight of the audit process, continuous improvements, overall improvements. We will see, uh, you see, I will now show you, I will now show you. You see here, it is in this format you will see. If you see, are you able to see it? For example, this questionnaire is in this format where the audit committee, you see, uh, on the scale of 1 to 5, it has every question, every poser for the self-improvement has to be given as a feedback by individual audit committee member of the company. 5 is a very strong, 1 is significant improvement needed. And these are the various posers. For example, under the organization, it is the audit committee charter clearly sets forth the nature and scope of responsibility and has been approved by the committee and the full board. So it is to be given as a feedback on scale of 1 to 5. Whatever you are feeling, whether it has been religiously adopted in the company or not. The next question under this constitution be the audit committee membership meets regulatory requirement, the right background and skills, and actively provides input. It is to be replied on the scale 1 to 5, 5 the strongest, and the 1 the significant improvement needed. In between, whatever your response, your feelings. So this kind of feedback once given and collected, uh, say the 5 members are there from the 5 people, it will be tabulated and it will be analyzed that where it is the weakness, where it is the strong, and who are in the majority of favor of those particular posers and questions. It is in the same way, it is the audit committee actions reflect independence from the management, ethical behavior, and the best interest of shareholders. Then it is the audit committee meetings are well organized, efficient, and effective. They occur often enough and are of appropriate length to allow discussions or relevant issues consistent with the audit committee responsibilities. Then it is appropriate internal or external support and resources are available to the audit committee. The other posers could be like this: minutes and reports to the full board reflect the significant activities, actions and recommendations of the committee. It is to be replied on the scale 1 to 5. The audit committee chair leadership is effective. This last question on this section of organization 1 to 5. It is audit committee agenda setting, oversight of the financial reporting process. Here the probable questions or posers could be which is to be evaluated by individual audit committee members. The audit committee, for example, the audit committee helps to establish the right tone from the top, which embodies insistence on integrity and accuracy in financial reporting. It could be the audit committee has achieved the right balance of proactive oversight and has neither infringed on the management's responsibility nor provided less than effective oversight. The next posers could be for self-improvement. There is appropriate consideration of the company's financial reporting risk and the related internal controls which are reflected in the audit committee's discussion and agenda items. The next could be there is appropriate consideration of related party transactions, including disclosures of those transactions in financial reports. In the same way, for the next section, oversight of the audit process. The audit process itself. The audit committee's act, for example, the posers could be the audit committee's actions demonstrate its direct responsibility for the appointment, compensation, and oversight of the work of the independent auditors. So how it will be responded? 1, 2, 3, 4, or 5 on that scale. It is the pre-approved process over no audit service provided by the independent director is effective and reinforces the auditor's independence. The next poser could be there is appropriate consideration of the management letter and other communication from the independent auditors. You will find that these items we have covered in our previous slides, but at the same time, this is the research findings and the development by NACD. I told you how they have developed and the scale on which each posers have to be, and each criteria of self-improvement has to be responded by individual members. Executive sessions held with the internal and independent auditor result in candid discussion of relevant issues. It is whether it was done or not. 1 to 5 scale. In the same way, continuous improvement. Under this head, the posers could be for self-improvement of the audit committee. The audit committee provides an effective orientation for new audit committee members. Whenever a new audit committee member is joined, so some orientation has to be given that what the company, how it is doing, who is who, KMP, the culture, the financial and the policies, risk management policy, and the financial policies and other things are to be given an orientation. The next posers could be the audit committee provides or encourages ongoing education for audit committee members. The audit committee's self-evaluation process is in place and effective. These are related to continuous improvement. So whether the audit committee self-evaluation process is in place and effective, so it has to be responded on the scale of 1 to 5. 5 the strongest and 1 the least. Any and all matters identified that require follow through are resolved. Next section is overall evaluation. Finally, individual audit committee member has to respond the poser. What is your overall assessment of the performance of the audit committee? 1 to 5. Whether the audit committee in their own view, from their own conscious, the truth is it is the best, the 5 marks, or the least, the 1, or in between. It has to be reported. Based on this feedback, a tabulation will be developed where a good it will be evaluated and analyzed that how the audit committee is working, whether any kind of improvement is required on a particular parameters, particular activity, particular their aspirations to improve the performance of the audit committee as such. With this, friends, I close this my session. And if you wish to have any other kind of question, you can very well come to our website. It is, you must have already in your email invitation, where you can very well come, and we will respond to you. Thank you very much, and sparing your weekend with us, and wish you a very happy weekend. Thank you.